And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today is Wednesday, May the 18th. I'm John Hoagland. Thanks for trusting me with your time. I do apologize for some of the technical difficulties we've been having for a couple of days. I did manage to catch one gremlin. I think there may be a couple of more lurking around, and hopefully everything goes smoothly for us this morning. As always, we're seeking accurate context in the marketplace, good risk management, and always focusing on patience. This morning's numbers, 7:30, the housing starts and permits came out. Housing starts came out about 40,000 less than last month, and permits last month were 1,879,000. It came out better than they expected today, but still a lower number than last month. So now it's 1.819 million. So just the knowledge that the housing market may be starting to slow, of course, largely probably due to higher rates, is in play here now. The equities ready to open lower before that number came out, and no help from the housing numbers. We're still waiting for the 9:30 EIA petroleum status report. U.S. stocks again set to open lower as Walmart, Lowe's, and Target disappoint in earnings. Following reasonably good retail sales, April retail sales yesterday. Powell's quote of the day yesterday has to be, resorting price stability is an unconditional need, which is one of the dual mandates of the Fed. So, of course, that has to be true. Crude pricing remains firm after the API announced a 2.4 million barrel draw on crude stocks here in the U.S., and we await the EIA petroleum status report today that is expecting a 1.3 million barrel boost. Don't forget, we are trading July crude this morning. Volume far greater in July than June. So if you have not made that switch yet, please make sure you do so. You're going to have a very thin, illiquid market in that June contract. So you want to make sure you switch to July. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling and love are always welcome here on the Market Forecast and the Market Recap. Subscribe to our YouTube channel. You get notifications when we do go live. It's a pleasure to be here again with you this morning. And as far as the VIX is concerned, it's up just a little bit, but still well below that 30 level. 2664, the dollar index up slightly at 103.52. And the yield on the 10-year continues to leak higher. Last I checked, sitting right at 3%. Good morning, Zachary Shaw, Tachyon, my brother Rick, love you. Charles March, Scott saw and he conquered. Terry King, Jay Crockett, Chris Johnson, good morning. Bisweed, Devante, Alfred, good morning. Decreasing open interest means what? Well, it depends. It's very contextual. If the market's moving higher on lower open interest, it's less likely to continue in that direction. But if the market is, sometimes it indicates that the market is losing steam in one direction. Sometimes it indicates that there's a liquidation of longs or shorts in that direction. So keep asking questions, Alfred, and the best place to do that is going to be today in group coaching. Let me get the link out here so I can put it in the chat so you can come. That's at 1 o'clock Central today. Hopefully you'll be able to make it. Here's the registration for it. And we can get a little deeper into some of the particulars of the open interest and what it means when it rises or falls in certain situations. So as everything in futures, everything in the markets, everything is all about context. So Bill, good morning. Tachyon, Brody, Theo, good morning. Glitter Sandwich, good morning to you. Rusty Golfer, that should be my name. Very rusty. Marcelo, Frederico, good morning. James, good morning. I think we're all doing okay. I know you're in your afternoon, getting ready to maybe sit down and have some dinner shortly here, James. I appreciate you being here. Sarah Hall, Brian, good morning, Sarah. As always, love and prayers for everyone. Kevin, good morning. Tom, my brother, I got my brother Daryl and my other brother Daryl here this morning. Love you. It's always great to see you guys here. Jerry is awake, and hopefully John is too. James Swan, Tachyon, my fear of markets becoming almost zero, asking how this trade will go helps a lot. Vince, good morning. James Harris, good morning to you. Trading Research. Powell went back to channeling Volcker. Yeah. Isaac. Dan Trader, good morning. First Brent settlement below WTI since May 20 yesterday. That's interesting information. Thanks for pointing that out, Kevin. John Doherty, JD, the Dancing Bear, is with us this morning. Good morning, JD. Zachary, ZK, Albert, good morning. Dan Emmons, if I keep saying the same names, I apologize. Alfred. The subject today is whatever you want in group coaching. It's you ask the questions. You can email questions. I can prepare for them. We can have just as things go. Ask the questions. I got a big black dog here moosing me to get pet. Lacey says, good morning, everybody. James going to make the coaching, but depends on work. Hope you can finish soon. Good. Does that look like a make code money? Oh, yep, that is. I apologize. That'll be tomorrow, right after the forecast. Well, aren't I a goof? Group coaching. Here it is. My apologies again. Sometimes I have personal gremlins. There is the link for group coaching today. Good morning, John Nystrom. Kayla, good morning. Joe, a couple losses this morning. Controlled risk, could have been more patient. We can always do that. ZK, I got folks. Come here, you. Come here, Lace. Come here. Say hi. They want me to give you belly rubs. Come here. Come on. No, you shy today? She's a little shy today, apparently. So, all right. Switch to July contracts in crude oil. Crude oil, Rusty Golfer. Today, the volume really moved over yesterday, so today we're going to be looking at July crude. It's about a $2.90, $3 discount from June to July. So you're going to have to adjust some of your levels. I've adjusted the weekly kickoff levels and other things on the charts for us to look at the market in context in the July contract this morning. So Kevin Lacey says, good morning, Lacey. I will when she lets me. She's usually pretty friendly with the camera. Today she seemed a little bit shy. So, anyways, let's move on to the charts now. Starting with the daily in the E-mini S&Ps as usual. Let's see if we can make this all happen smoothly. And there we go. All right, so lots to kind of talk about in these markets, as there usually is. So rallies continue to present as hollow. What do I mean by that? Here's some information for you. Person who was asking about open interest. I'm going to go back and look and see if I can find it here. Alfred. So when we're looking for a market to continue to run to the upside, okay, when the market is in a context or in a market state where we're expecting it to go higher, watching open interest can be pretty useful in a longer time frame to see how healthy the auction really is. So since we've been putting in lower highs and lower lows overall, we notice that the days when we do rally, we lose open interest, or at least we don't gain much. Yesterday, on the push to the upside, we lost an estimated 7,500 contracts. So that means that this is more about short covering or positioning for something else than it is about buying the S&Ps, looking for it to continue. If we had an increase in open interest yesterday, I might not call yesterday's rally somewhat hollow, because we had an important inflection level, 40.48. The market went up above it. It held above it. It closed near the highs. And still, we didn't add any new business. That's what we were talking about, or would have talked about on the forecast yesterday, was we need new business for this market to continue the move to the upside that it started last week. But we're not seeing it. We're losing business. We're losing open interest. Now we're looking at this as a potential bear flag. Yesterday in futures in the S&P and in the New York Stock Exchange, volume was lower. We lost open interest. That tells me that this rally that we had yesterday is suspect. Already we can see that we're trading below that important inflection level of 40.48 weekly kickoff high. And we may be breaking out below this trend line here on this bear flag. Take a look at this 30-minute chart. So here's what we're looking at as a bear flag. Prices overall moving lower, a move in the opposite direction with narrow ranges, low volume, and losing open interest is exactly what we've got here. So in the overnight, we started trading below this trend line. Now, this trend line goes back to the low of the 12th. It's approximate here. I'm going to move it a little bit closer to where it should be. We've got 1, 2, 3 points of contact yesterday, which makes this a relatively, important trend line. Last night, we traded down below it. We traded back to it. And now it looks like we are looking for some continuation to the downside. All right. So looking for, as long as we remain especially below this trend line and especially below weekly kickoff high here, we're looking for this market to maintain price below that level, losing open interest on the way up, hollow rallies, maybe a pretty big downside opportunity today. And as we always say here, anything can happen. Anything can happen. ACH, that's our acronym here on the market forecast. Anything can happen. Technically, this thing is lined up to get us to get a nice push to the downside. We've got a naked point of control down here at 40.10. We got another naked point of control down here, down at 38.97 approximately. So those naked points of controls are visuals that the market tends to try and get to. And if we have traders that are focusing on those levels, eventually they will have price go to that direction. What traders fear the most, they create. The market always goes to the point of greatest aggravation. So we're going to be looking like we're opening below value. We've got some overnight shorts. Overnight shorts are going to be looking for continuation to the downside. Continuation, new sellers, regular trading hour sellers to go ahead and start continuing this push to the downside. So our opening today might be somewhat important. Yesterday, it was somewhat important because it offered an opening range trade that offered a pretty decent opportunity that did not hold throughout the rest of the day. We brought in some buyers, but those buyers were probably getting out more than getting in just by the knowledge of the reduction in open interest. Now, it wasn't a huge reduction in open interest, but on a push above an important inflection level, the fact that we didn't bring in business to me is saying that there's something else going on here. All right, so we're going to be opening probably below value, maybe even below yesterday's range, which would create a gap, which then we get into gap rules where we trade in the direction of the gap if we can't close the gap relatively early. We could easily pull back to value to weekly kickoff high. We could even easily pull back to this trend line before actually pulling to the downside. So the opening, I think, is going to be somewhat important today. The opening ranges have been terrible. They have not been very successful. We saw one yesterday that was successful, at least for the better part of the morning. And so that's why I'm thinking if we're going to start to see the opening range starting to prove useful again, maybe our short time frame traders have abandoned it because it has been so bad. So I'll be watching the opening range, especially if we open with a gap. And then Joe is right. I mean, if we open with a gap, close the gap, and go back into an accept range from yesterday, that opens up a value area special situation play in the opposite direction, which, in my opinion, gives us even better trade location to look for shorts because we continue to see hollow rallies. Now, don't forget, we are coming into rollover in the equities. We've got some time before I think we really have to be concerned about it, but the overnight moves have really provided, maybe even better opportunities than the regular trading hours. It's a bit of a change in personality, but it doesn't mean that we're still not finding good trade locations, good opportunities in the regular trading hours session. Saw some traders talking about that, I think, on Twitter, and it kind of makes sense that we are coming into rollover and the market is kind of searching for direction. Let's take a look at crude oil, where we've missed the opening range here, but I don't think we're going to be missing out on much. Here's the daily chart. You can see this is the July contract. I've adjusted all the important information to the July contract. Our weekly kickoff low, we broke out above it on Monday. Remember, these weekly kickoff levels are not meant to envelop the week. They're meant to show where important levels might be, where longer time frame traders might adjust inventory, knowing that we're coming into rollover, which we did switch yesterday. So we've got a couple of more days where we're going to have a little bit of blurry volume and open interest. We've got an inside day in extended trading hours. This is something that I would expect on rollover because we know that our longer time frame traders are focused more on getting a cheap rollover done. In other words, taking all the contracts that they're still holding in June. If they want to move those positions into the future, they're going to have to roll into a future month, and they can save themselves and even earn money on rollover. But it takes a lot of their energy and a lot of their focus away from directional trade into range bound and opportunities to leg their spreads or use the spread to buy the bid or sell the offer. If I've got 1,000 contracts of crude oil and I buy the bid, if I need to buy the bid to move my position over, I save myself 1,000 ticks. You know what they say in Chicago? 1,000 ticks is 1,000 ticks. And if you say that in Southside, it's 1,000 ticks is 1,000 ticks. All right, so take a look at the 30-minute chart. We had a late spike yesterday to the downside. Okay, the base of that late spike is this low right here, and it is, where's that number? 110.34 in the July contract. 110.34. we had a late spike. In other words, price moved a lot lower and didn't have time during the regular trading hours with which to accept that. We're opening above the base of the late spike, which should mean rejection of lower pricing. And I don't think there's anybody that doesn't believe that crude prices are going higher over time here. Just when are the good spots? So we got the late spike. We're opening above. That's rejection. We open in range and in value. That's going to tell me it gives me license to chill a little bit, not to get too aggressive too early in this market. As of course we know, we are waiting for the EIA petroleum status report, which, by the way, again, they are expecting a 1.3 million barrel boost in crude stocks here in the U.S. after the API announced a 2.4 million barrel draw yesterday. Well, that's not going to really help us that much, but just the fact that the market has opened in range and in value, we've maybe got some overnight longs in this market, gives me a license to kind of chill a little bit and wait. It's rollover. There are traders that directional traders that refuse to trade during rollover, and there's a reason for that. The markets are, well, I think it's people that are irrational, but the markets go too far. They don't go far enough. The markets just get a little bit strange during rollover. So, you might consider being really cautious and patient today in crude oil because, again, of the roll. I say that so much. You guys probably get tired of it. Here's Nasdaq. Volume was just okay yesterday. Open interest again was lower, indicating the probability of a hollow rally yesterday. Now we've got all kinds of gummy stuff up above here. We're kind of looking at some resistance in the Nasdaq and even in the S&Ps here, but the S&Ps got a little bit further. This 25%, 12,576, that's 25% off the all-time high. I would have pointed it out yesterday if we had the forecast, but I thought that was going to be an important visual, and that's right where the market went to yesterday and left from this morning. Visual levels can be very important. Markets are extremely visual. We have the same signal of a bear flag here. Take a look at the 30. All right, so here's that same trend line in the S&Ps, same contact points, same way that it broke out last night, came back up to it. Looks like we're going to be opening below value. If we open with a gap, that also gives us more of a rule-based opportunity. If we can't close the gap, we look for opportunities to sell into strength. Again, anything can happen. When the regular market opens up, I'll be watching the opening range here. The opening range in the Nasdaq has been viciously large. It's not something I would take immediately. I may wait for the market to come back inside the opening range before looking for an execution. And again, I think the closer we are to a gap, the closer we are outside of balance from yesterday's range, the higher probability that the opening range trade may play out. And again, as a caveat, the opening range has been horrible lately. The openings have been very choppy in the equities, so try not to get too aggressive here too early. It's kind of dinged if you do, dinged if you don't. What else am I looking at? Yeah, just the bear flag kind of breakout warning. And this could come all the way back to this trend line before actually crumbling. And again, ACH, anything can happen. Gold. Volume and open interest has been dropping as we have fallen into a period of range-bound activity here. Overall, the longer medium time frame, I'm going to say, has been to the downside. That structure still remains. We are 1 week from roll date. 1 week. So we're already in rollover in gold now. We've got I think the Treasury's next, the currency's next, and then the equities next. And then we don't have to worry about most of these for another 3 months, except for, of course, our energies. Balance forming consolidation. This kind of goes with the theory that the longer time frame traders may be focusing more on getting a cheap roll already than becoming directional. 1, 2, 3, 4. Nice range here. Yesterday, on the pullback off the high here, we lost 1,300 contracts in open interest. Not a huge number, but just a little bit of a hint that the buyers that were holding maybe decided they were going to get out of some of them yesterday. Again, it's all about context. All right. Here's the 30-minute chart. Overnight inventory was a little bit shortish. Shortish, that's an industry term. Not anymore. I don't think we're short or long. We've got an opportunity here to take off this naked point of control because we have reached it in regular trading hours. And we reached it right here, approximately. All right, so we have a gap. The market is attempting to close that gap. If it cannot close that gap relatively early, the rule is we go in the direction of the gap, which has us looking for shorts. Last week's low and this week's low look interesting to me. We've got 1784, which is basically this week's low, look like interesting levels for me. And we've got another naked point of control up here. I think this is a bit of a random walk here. Here's 1, 2, 3. You stay there. 4 days in this area of balance. It's almost like this is a little bit of an anomaly up here. We had a lot of overnight longs yesterday that just basically brought price back to close the gap. Now another look. Now we're still in this area of balance here. It looks to me like our overnight high is a really interesting area for us. And that would close the gap. Let's look now at the euro. Go to the daily. So coming into rollover as well, back into this narrow area of previous balance. If you remember, this was kind of on the back burner for me during this period of time. We've moved down to a weekly kickoff low. Now we're back in this area of balance. I'm kind of expecting this weekly kickoff high here for the euro 10547 to be somewhat magnetic for the market because it is right in the middle of this previous area of balance consolidation, chop, whatever you want to call it. We had a little bit of an uptick in volume yesterday and an uptick in open interest. So this pullback off the bottom here, while the first couple of days of it didn't provide too much volume and or open interest, we had a little bit of a boost in open interest yesterday that brought us back to the weekly kickoff high, which again, I think is going to be more magnetic than repellent. All right, so naked point of control reached yesterday. Left another one behind. Big gap down below. Again, looking at this, weekly kickoff high is likely to be somewhat magnetic. We've opened with a gap. We've closed the gap. Does this give us an opportunity for a value area special situation play? You've got to weigh the fact that the range yesterday was so small. Is it actually worth it? This market is a little bit unclear. Some days the markets seem to be much more clear than others. I'm not real clear here in the euro, and a lot of it is because we're right back in this choppy area. It just seems like we've fallen back into this, and we may fall back into it, even for a longer period of time. Here's the 10-year. Disappointing open interest loss on this push to the downside yesterday. on a breakout from a bear flag. I'm looking for this market to come all the way back down to weekly kickoff low on the breakout of this bear flag. But again, yesterday, volume wasn't all that great, and we lost open interest. So we did not bring in new business to the sell side yesterday, which makes this push to the downside act a little bit suspect, a little bit hollow, if you will. Losing 14,000 estimate. Now that's not a big change for the 10-year, but it does give us a clue as to who was involved in the auction yesterday, and it was more about longs getting out than new sellers coming in to push this market lower. Longs getting out takes selling power actually away from the market. So if we don't bring in new sellers into this market to increase open interest and maybe add a little bit of volume, then we may not see this bear flag amount to much. So far today, it doesn't look like it's amounting to much. Still looking for opportunities to sell strength here, but we've got a lot of space above where we may need to let this market let off some steam to the upside before returning back to the downside. Now, we've opened with a gap. We have now since closed the gap. So the gap rule is now off. Doesn't mean that the low of yesterday's range or the low of value from yesterday may not provide an opportunity for resistance for us to look for the opportunity to continue to the downside. But there's lots of different levels with which to look for that opportunity. So this market could certainly pull back. We've got a gap from the day before yesterday to yesterday. We've got a naked point of control up here that I haven't yet put on here yet. I'm going to just throw that on while we're here. That is a visual target. If we've gotten a too short in short or medium speculator time frame, this is a target that will scare people. And if that is the case, they may push price up to that level. So again, the fact that all these markets are in rollover or so close to rollover makes the hypotheses a little bit more difficult to come by. I'm not seeing that there's any clear, great indication of good context in anything here. Here's the nat gas. If we do have context, we maybe have it here. We didn't do very well as far as volume is concerned on this push up yesterday, but we did have 4,300 in open interests. So that indicates as the market continues to move higher, if open interest increases, there's still money coming into that side of the market. So we've got basically 3 out of the 4 table legs saying that this auction process off this low is continuing to bring in business. We've got higher open interest. We've got one time framing. In other words, range over range is higher, low, higher, high. We've got the perception of participation because the market is not range bound, it's directional. The only thing missing is that volume. Now we've got an opportunity to see price back above this weekly kickoff high here, which is $8.37. We've got our 920 August 28th swing high. August 20, it's 2008, I should say. 920, August 2008 is the last time we've been this high. We got last week's high, that level with which to contend with if we continue this move to the upside. Does that help us for the 30-minute? Well, we traded straight to weekly kickoff high yesterday, found some consolidation. We'll back to weekly kickoff high. Are we holding some overnight longs? I would say we are on the open here, by the open. I'll move back to weekly kickoff high. These highs here from yesterday and last night could provide a decent long opportunity. And anything that we're looking at in order for us to even think about taking a trade is, does this level offer me the opportunity to limit risk? Trade location is directly related to the point of invalidation. Where is your stop level? Think about that before getting in. Quite often when I take a trade, I put the stop in before I put my entry. I base a lot of my entries on my risk appetite and how much I'm willing to risk technically, not financially, not a static stop. Is the market close enough to the point of invalidation, the technical, real point of invalidation that I see? And if it is, then I can take the trade. Right. Okay, so we are back here. We are going to take a look here. And T Spells, I'm looking forward to having you back in your Top Step journey and having you succeed. Smooth as silk. Lots of repair to be done before we go higher, Devant. Vince had a good trade location. Took a profit, but not all that. No, not too much. Spreaders love rollover. Oh yes, they do. Especially when the locals were in the back month working the spreads. They were printing money. My goodness. I'm good. How are you? My goodness. Or goodness. Good morning. I'm doing good today. Thank you very much. Thank you, Marcelo. Kevin. Oh, thank you. You've always got such nice things to say. I really appreciate you, Kevin. Thank you, Sarah Hall. All right, let's take our deep breath. Stay humble, grateful, and creative today. Be good to yourself. Be good to others. Say a prayer for peace. Say a prayer for those that aren't feeling all that well today. God bless you. Looking forward to seeing you for group coaching and looking forward to seeing you on the recap. Have a great session. Trade well. Get out there and profit. See you in the proverbial trading pit here in just about 5 minutes. And again, thank you all for keeping an eye on me. And I got one of them. I got one of these little guys. One of these little gremlins. I'm going to get Gizmo here next, and he's going to protect me from the gremlins. So trade well, everyone. Have a great day.